Sup guys, your boy Quickstocks is back. As always, remember to hit those thumbs to recharge my dopamine. Without further ado, this is PayPal Analysis, April 3rd, 2020. Let's get right into it. PayPal, ticker symbol PYPL, currently trading for $91 a share, down 26% from its highs seen in February, with a PE of 44, which may sound rich, but historically speaking, this is actually a relatively attractive PE for PayPal. So what's the move? Well, we currently have a small position in PayPal of $1,000, equating to 11 shares. Is it our chance to expand our position, or is PayPal's golden days behind it? Let's take a look. So PayPal, which is an online payment system that accepts online money transfers, had a Q4 2019 revenue of $5 billion and an estimated total company value of $100 billion and an EPS of $3.10 per share in 2019. Quick fact of the day, our boy, Papa Elon, was one of the founders of PayPal, which is where he got the money to start Tesla and SpaceX. Let's get into PayPal's largest revenue source, which of course is transaction revenue. PayPal announced an increase in merchant processing fees to a flat 2.9% plus 30 cents on domestic transactions in the US. And if you are a seller receiving funds that come from countries apart from the US, you'll be charged a much higher transaction cost of up to 4.4%. Whereas we covered in our Visa video, a brick-and-mortar retail business can expect around a 2.3% transaction fee for your typical Visa and MasterCard. I feel like it's important to briefly talk about crypto, which alongside government regulation could be PayPal's biggest bear case. So, just to be clear, crypto's goal is to eliminate the third-party business model, which goes directly against PayPal's intrinsic business model, where PayPal is just that, a profit-oriented third-party corporation. For example, if you consider Bitcoin, a user pays nearly no fees. And realistically, as crypto becomes more mainstream, it only makes sense for people to transition to a system with little to no transaction fees. Does this mean that PayPal is going to become, say, the landline of the next generation? Whereas the landline is certainly useful, but only because you bought PayPal shares instead of paying your cell phone bill. Not necessarily. I suspect that we are still a decade away before we see widespread adaptation around the world. And one could certainly argue an ever-growing company such as PayPal should be able to incorporate this ever-changing environment into its ecosystem and potentially improve its business model. Regardless, it's something that should be taken into consideration. There is no arguing that every day more transactions are being done digitally. However, it's anyone's guess where we end up a few decades from now. Anyways, speaking of PayPal's ecosystem, I'd kind of like to check out some of the corporations under PayPal's umbrella. They actually have some pretty cool companies underneath the hood. First, we have to cover Venmo. That's right, PayPal owns all of Venmo, which it acquired for $800 million in 2014. So, in all honesty, Venmo and PayPal are fairly similar. Both charge similar fees and offer similar features. But that doesn't mean Venmo isn't a big player on its own, with 40 million active users and an insane 64% increase year over year as of the third quarter of 2019. However, it's important to note that Venmo is still not profitable, which kind of makes sense because currently the company is focused on rapid growth. However, it's important to note that not only does Venmo make money with transaction fees, but they also invest float cash, which is cash consumers have sitting in their account. Next, let's take a look at Xoom. So of course, Xoom is a PayPal service that provides worldwide money transfers. It allows consumers to send money, pay bills to 52 countries. So I'm not going to go over every company that PayPal owns because they're all payment transaction companies. So it'd get pretty boring if I were to say the same thing over and over. So briefly, we have Braintree. Of course, we have Venmo. We have Paydiant. Of course, we have Xoom. We have Modest. we have TO Networks, iZettle, and Hyperwallet. Those are the big 8 companies within PayPal's network. So what's the word? Well, PayPal operates in a truly massive market. Global retail e-commerce sales are projected to grow to more than $6.5 trillion by 2023, up from $3.5 trillion in 2019. And PayPal has approximately a 20% share of this enormous market, and this figure is likely to keep rising in the coming years. So without a doubt, as we head to a cashless society, PayPal should see many great years ahead. However, since I already opened a small position in PayPal, I'm not really interested in increasing my cost basis with such economic uncertainty ahead. However, with the market being so volatile, I would not be surprised to see PayPal trading for the low 80s, which would make for a much more appealing case. Anyways, guys, that's all we have for today. Be sure to hit those thumbs and subscribe. I'll catch you guys in the next one. Take care.